Good morning, folks. If you could give me an audio check real quick on Twitter. Just tweet to me 5x5 audio and chart is good. That way I'll know I can begin. I'm checking Twitter now. See if you guys can hear me. Awesome. Thank you. All right, so let's get over here and take a look at ES. The right one. All right, so I've already shared something this morning on Twitter, and I'll talk about it as I have opportunity. Right now I just want to see what we have. About a minute and a half before the opening. So I'm looking at the dollar index, and we've had a nice run higher, and I'm going to favor the sell side on ES early on. I'm going to watch the opening range. So what that means is the first 30 minutes, I'm looking for how price delivers. So I don't have a hard line bias where I'm wanting to take anything as a short, but I'm looking for another run through this low, so that way you at least know what I'm referring to. As a reminder, I have an appointment today that I have to escape for. So at 10:30, promptly, if not a minute or two before, I'll be closing the session. Watch this. For everybody got it right in here. I'm wanting to see if we can draw back down into 41.15, 41.15 and a half. I don't like the lows that we have here. And I apologize, I have a little bit of a tickle in my throat this morning, so I'm probably going to drive you nuts with that. Wish I could avoid doing it, but I can't. So we're watching the delivery from here. And focus is down here. Do not trade on this. You're observing. Opening range can be squirrely, meaning that it can do a whole lot of gyrations. You've already had a nice move early on, so the mindset I'm holding here is if we get down there below that 41.16 level, and right now we're looking like there's respecting a little bit too much on that order block here, so it might need to go up a little bit higher if we're going to go lower. So watch that order block here. So we'll take these lines off. They've already accomplished the method earlier. Alright, so right in here, watch that. I saw a guy tweet to me yesterday. I didn't see it till late last night coming in. He says, I'm confused watching this live streams. You're saying sell side, then you're talking about buy side. Right, that's tape reading. It's not trading. You got to get a feel for what you're looking for as a setup. No setup here. Whereas reading the tape, getting a feel for what it wants to do. Now, as long as we stay above 103.75, 103.70 on dollar index, that would keep me looking for lower prices for stock index futures and Forex. If we go back below 103.75, 103.70 for dollar index, then that would allow for upside for foreign currencies, and risk on would be back in style. What makes it difficult still, we're reacting off of a volume imbalance in here. I apologize, I was looking at my dollar. So this right here is what we're keying off of right now. It's a little too thick on that. If you take a look, and you still have time to do so because there's nothing really to be too worrisome for at the moment. But if you go to your daily chart on ES, if you look at that in relationship to the range that we've been in since February 2nd. So February 2nd to now, we're just chopping wood. There's marking time. It's not really moving a whole lot, which means that your trading has to be absolutely surgical intraday. Getting in, if you get a win, get it, be done. We haven't really entered a point at which where we have a sustained run. Longer term, on the daily chart, I would favor going higher. On the lower time frames, it's mixed, and the dollar index would have to really crush that 103.70 level to the downside before I would get decisively bullish on ES. Meaning, in layman's terms, and making it easy so that we understand what's going on, I believe we are in a choppy condition. It's going to be range bound probably until we lose that dollar index level I just mentioned, or if we start powering higher up. What makes it more interesting to the downside for ES and foreign currencies is if you look at the dollar index, you can pull that up on TradingView with DXY and toggle the selection for TVC. That's the CFD on that index. If you take your attention to January 5th, 2023, that candle's low, 103.98. That level is what we've already tapped into. Or no, we haven't. I'm sorry. That's what we're looking for on the upside. Yeah, we've hit it. Sorry. So today's intraday high comes in at 104.06, and I'd want to see that daily candle on January 5th if we can get through the midpoint of that, which is mean threshold. So everything becomes much more animated and much more dynamic in price delivery. So speed, big moves, big candles would occur if we can get up through on dollar through mean threshold, and that would be heavy down close candles on stock index futures. As long as we are below that mean threshold, it's going to bang around and chop for ES and for Forex. So that's kind of what we're expecting in here. So watch that blue shaded area here on the chart for ES. That's our next premium array, or draw on liquidity. So far, just tapping that old. This is a 5-minute. I failed to mention that. I apologize. In the example I showed this morning on the execution, this little teal colored rectangle is a 5-minute fair value gap. I want to see it spring up into that fair value gap here. So notice how we moved off that order block here as we were hitting it. Traded through. This didn't offer too much. I was really looking for it to come back down and touch it. If it had done that, I would have mentioned that being the case, likely to draw to consequent encroachment and see if we can drop into this level here, the fair value gap right there. Or do that. I'm going to try to start the practice of extending my rectangles when I'm identifying a fair value gap, because sometimes when you have it laying over top, it's hard to see my wicks in the shadows of the candles. So if I extend it past that way, you can see where they're really formed based on the candle low here and the candle high. But this teal colored is a 5-minute fair value gap. And new day opening gap is up here. It's just the range, 1 tick difference between the 5 p.m. close yesterday and then the 6 p.m. opening. So there's separation between that 1 hour's difference. That's a level that you want to have annotated in your charts all the time. And you can see this. It's just beautiful to see something like that deliver. Right out of the book of ICT. Alright, so we have essentially hit that. Let's see what the high on that candle comes in at 41.29.5, and the delivery on this candle comes in at 41.29.5. So that's perfect. Now what you want to be paying attention to is we do have a new imbalance here, and this is an old one. So while if it, say for instance, let's make the argument that we're going to run for the buy side that's resting right in here. And if we slip from where we are on dollar right now, we're trading at 103.92 on dollar. So if it was to slide down, there's a small little imbalance on dollar. If you look at your 15-minute time frame, it may not be influential this morning, but I just caught my eye looking at it. It's the 7:45 a.m. today's fair value gap, that little 15-minute time frame. If it were to retrace lower, that, in my opinion, would be the last line in the sand. I know I mentioned 103.70. It needs to stay above that for it to be bullish, which would be risk off and weakness for ES and foreign currencies. But now looking at the 15-minute time frame, yeah, it could trade down into that fair value gap and still go higher, but it would have to stay above that fair value gap on the 7:45 candle. So 07:45, that's the time on dollar index. You can pull that up on TradingView with DXY as the symbol, and TVC is the actual instrument you're going to call up and have it set to a 15-minute time frame. So 7:45 time, you'll see that fair value gap there, hanging around that 103.68 level for dollar. So we're coming down here, touch this fair value gap here. Because we have essentially, with this low, we've worked below the bodies of these candles here. This here, remember the wick, that's a gap. So we're trying to measure the willingness to want to move. Spill my water here. Water. We want to see if it makes a more meaningful run below for the sell side here. Dollar index is still holding firm. Now we're back below this fair value gap here. So let me zoom in a little bit more. In this instance, this many times would be an opportunity where I would look for a break below that come back up and use the low or the consequent encroachment of an old fair value gap to frame a setup that would send me into a discount array being like an old low here, or this low over here, or if there was a fair value gap in something to the left, that would be a scenario like that I would be looking for, because I'm favoring the likelihood that we'll probe that low, even though we've already went down below. And why am I saying that that's even considered for me? We've already went through this candle's close to low, so that's what consequent encroachments here. Extend that through. We've already went down to it and through it. So all of this choppiness in here, it may be just excuse me, a precursor to an eventual run back down below here. Even if it is to reject and go higher later on, or if it continues to go lower, I still like the idea of looking at this today. So even if we don't do it while I'm here with you today live, barring any kind of breakdown on the dollar index based on the levels I gave you moments ago, I would look for that as a potential afternoon setup. The buy side in here, remember these are relative equal highs. You can see these are closer, but if, in my opinion, if they're going to bump that high, they'll run through here and tag that. So getting back to what I was saying, there's a gentleman that, I'm assuming it was a gentleman, I apologize if it isn't. There's no telling how you guys identify anymore today, but the fair value gap here, watch this and see if it wants to come back down, touch it, and then springboard from that into the buy side resting above here and here. And if it can run to 36.75, or let's call it 41.37, that would be a 5-handle run. Consequent encroachment now has been reached in this fair value gap. And the benefit of being able to sit and tape read like this is you want to identify the times when the market's most likely going to be choppy, which is what I've already outlined this morning based on everything I've described based on the daily chart, where we are in that range between February 2nd's candle and today. We're just marking time going sideways. So you have to be very specific and nimble on these lower time frame charts, otherwise you can get burned. The runs can turn around on you quickly. They can be short-lived, meaning they might go, but as soon as they go wherever they're going to go to, whether it be above an old high or to in balance, once it goes there, it's right back to the middle of the range. And you're probably asking, well, what do you mean by the middle of the range? Middle of what range? Well, we had a lot of movement between the 830 and here for a 1-minute chart, and we keep gravitating back to about midpoint here. So if you look at the bottom of that old 5-minute fair value gap, which is a teal colored rectangle, use that kind of like as a baseline midpoint, and it just keeps gyrating around that, consolidates here, moves away, comes back to it here, comes back to it here. We moved above it now. So does it stay above the bottom of that 5-minute fair value gap? If it stays above it, as long as it stays above that, we are looking for the market to expand up and attack the buy side, or buy stops resting above here. It does not translate to a signal or a trade. It just means that you're reading price action, which in time, over time, you'll be able to see setups that form. There's no setups here. I've not said here's a setup that this, you're just measuring. I'll tell you if I see something. It'll be very plainly explained to you. This is, I want to see it run from here to here. Right now, this is what it should do. It shouldn't do that. So yes, it would feel a little disjointed if you just started watching these and you're expecting to hear, this is a buy, this is a sell. You're rushing, and I saw a few other people commenting, I see what you're saying and it's happening, but I'm frustrated. I don't know how to see it like that. Well, why would you expect that? You just started sitting down with me. I mean, I just began last week. It's only been 1 week. Unrealistic expectations. So already we have 16 minutes of opening range, and nothing really excites me in here. Like, it doesn't really get me interested in anything. remaining 41.28 or below it just keeps us in contention for that sell side liquidity pool at 41.16. It should run at 41.3650. I would expect that now. They left this high here, which falls short of these relative equal highs. So while I have this one annotated, you also on your chart, you want to have that noted here. And you want to watch and study. This is the whole point of watching price action like this. When you're not having a trade on it, you don't care if the outcome is going to be favorable or not. You're watching the candles and you're getting used to reading that, seeing how they form, what their relationship with the previous candles are, how they're reacting off of an old imbalance, an order block. What's the speed and urgency that it wants to get into this buy side? In my opinion, it's spending too much time. I'll add that level here just so you can see it. Okay, so what I'm looking at is I'm seeing these two highs here and how we repelled away from that. We did not take that low out with this pass here. We did go through consequent encroachment of that wick. So let's play devil's advocate for a moment. What would be a reason or a catalyst for an opportunity if there is an entity out there that's dubbed smart money? What would be the benefit of the market going up to this level here, or maybe this high here? It's something you could study is, does it go above these highs, pause, or sharply reject it, and then work down towards these lows here that are now considered relatively equal? So because I think that that high here is suspect, meaning that they're probably going to want to probe the liquidity above that. If it were to run above that, the narrative in my mindset would be, okay, if it's going there, I want to see, does it break lower and then seek the liquidity that's classified as sell side down here. Came back to touch that 5-minute fair value gap again here. At this moment is one of those times where I'm like, okay, I got 2-3 minutes it needs to deliver. If it doesn't do it, if I don't have a trade on, but I'm saying because it's done this, I start counting down. It has to do it in the next 2 to 3 minutes. And since these are 1-minute candles, over the scope of the next 2 to 3 candles, it would have to deliver 41.35.75 or higher. Keeping in mind that we are in a choppy condition. We're not looking for trending models that evolved this morning. We're just studying how the market's seeking liquidity, and it's aimless right now. It absolutely has nothing that stands out as a high probability, low risk trade. So if you are pushing the button, you are gambling. See how it's being real fickle about getting up there? It's getting there closer and closer and closer, but it's being real lethargic in the way it wants to get there. Now I want to see it pop. I want to see it just reprint 41.3650, 41.3675. Still below the 35.75 level. I know some of you are like, where's the US 500 chart, Michael? It's confusing for me to keep looking at that chart. I tried. I'm trying to do my best to help all of you. I can't. And if you're looking at US 500, you're looking at my live ES chart live. So you can compare and contrast what you use and relate to them comparatively. They're not going to mark to the same price identified perfectly, but the candle formations are pretty close so you can track everything I'm doing. Don't be upset with me because I'm trying to do more than I'm reasonably expected. So that blue rectangle, which is this fair value gap here, I would prefer to see it hold price and it's already went outside of it. We're back down in that 5 minute. So now think about this in your journals, in your notes while you're watching this, because we've identified the likelihood of it being choppy, and also you're learning how frustrating it can be if you're looking for an objective, which is why I told you to sit on your hands, because we're in choppy conditions. The market's going to be very fickle. Fickle meaning that it's going to be a little bit of movement that you want to see, then a lot more retracement than you want to endure. Then it moves in your favor again, thinking it's going to deliver what you want it to do, and then it pulls back again. And then it starts to run real close to it, and then what does it do? It fails and wilts. So these are the conditions that I blew accounts with. When I was trading, before I knew how to trade, I would put real money into these conditions and hold on to these moves and wrestle it and say, no, I put my trade on. I'm going to get my position filled. It's going to go here. You're not going to scare me out of it. And it would just grind me up. So you have to know by experience, sitting in these market conditions with someone that can identify what they are beforehand and how they're going to trade. Are they going to be aimless, meaning they're just going to chop around and present potential opportunities to the neophyte? They would see something in here and say, oh, well, this is one of those things ICT talks about, or this other methodology of trading. Dollar looks like it's trying to make a higher high. That was that. Now, if we do press on dollar, let me go over here and look at my chart. I'm sorry. Look at your 15-minute time frame dollar index. We have a high at 104.06. If we clear that and show a lot of animation to the upside on dollar, that's going to push us down into that sell side. We're below this, the fair value gap. Now this becomes a point of which I would look. Please don't take this as a trade, but I would look for this now, because we took this short-term low here. So we have the high, higher high, failed to go to a level I wanted to see it go to. We have a shift in market structure here that's bearish. How do we frame it? We have the fair value gap low here and consequent encroachment. If we are able, and it may not do it, but if it come back up here and touch that fair value gap, or if we don't run off all the way to it, getting down to a rate in one shot, which it looks like it's going to do now. You guys are dogpiling on it. ICT's just showed its cards. No, I'm in nothing. But I would like to see it deliver that sell side now. And if it was able to come back up here and touch the bottom of that fair value gap, that would have been better. I would have said that's a short for sell side. And that's where we're at right now. And we did so without dollar making that higher high. So that is a bit concerning in my mind. I got to see how. Yeah, we didn't get the higher high on dollar. NASDAQ, you can look for 12, what is that? 12,532. Let me see. I don't want to give you a wrong number here. 12,540. And then we have the low of the morning at 12,534 and a quarter. Yeah, dollar would have to really spread its wings here and go higher for me to feel confident. Otherwise, this run lower on S&P for that sell side we've identified, that might be just them accumulating longs on that sell side and then run for the buy side at 41.3650. And the reason why I'm even considering that as a potential is because we've done no higher high on dollar index as we ran that low out on ES. So while it did go to a pool of liquidity that we were looking for, that in itself might be a setup, because it's choppy, it's aimless today. It would have to stay below the consequent encroachment of that teal colored fair value gap, 41.28 consequent encroachment. Yeah, dollar's not able to sustain this run here, at least for right now. It hasn't. So by identifying these types of market profiles, and when I say profile, that's not market profile in the sense that you use that horizontal volume indicator, and you're looking for point of control, and I have no faith in any of that stuff, and I'm not trying to make fun or say anything disparaging about it. That's my opinion, and that's how I view it. Watch the old fair value gap here. This is the time when, if we sell off from that fair value gap on ES, then we should see lift on dollar, and dollar should make a higher high. You want to see it roll right on through the midpoint of this wick. If it's going to go lower, it's going to show you with animation, just rip right through that and show no respect of the midpoint of that gap, or the wick, which is a gap. Dollar's trying. Yeah, here we're going to get a higher high on dollar. We should see this thing. Let's go to a 15-minute time frame. All right, so if we lose this low here and start to get animated in larger ranges and start to speed up, and we have a higher dollar, advancement, if we start seeing the 15-minute time frame on dollar index really start to move to the upside and tear through that 104.10, that would set my mind on potentially returning back to that old new week opening gap down here. But we'd have to, well, we're in striking distance of the dollar making a higher high today, so let's see what we get. Incidentally, I told you y'all yesterday with the British pound, I told you to mark out your fair value gap, and we traded down into it, and then once we got below it, it traded back as resistance, and that was a nice sell-off for the London session this morning, and broke lower. It's still ripping lower. We're below 119.92, 91.90. Euro, similar fashion. I know you've been wanting some ICT goodness in the Forex market, but I've been away from it. You need to go back, ICT. Come on. So you can see how we went down, took the sell side out, and we're just hanging inside that lower portion of that range. So when you see things like this, it is very rewarding when you know what to expect, and if it's going to be choppy, it saves you all of that mental capital about looking for big runs right away when there's nothing there yet. Where most retail traders, they're going to be all over this thing. They're going to be trying to do something constantly. And wise men tread carefully when it's like this. I'm willing to let go of the first move of the day when it's like this. I don't care, because in my back pocket, I know that if I'm surprised, okay, say something comes out, some event that was unforeseen, to me or anyone else that would be speculating, and it causes the market to really move a lot, that's no problem. I know I have the afternoon session that I can participate in, and I'm not worrying about it or fearing missing a move, and I'm not forcing the understanding of what the market's going to do right now. That's what I was telling you I was concerned about, because we didn't see that higher high on the dollar yet, and we went down to the sell side here, all the way back up to that 5-minute. I thought I was plugged in here. You plugged the wrong one in. That one, yeah. No. My helper's not that much help this morning. I apologize. I buy him a car for his birthday, and he's slacking already. All right, so we've taken the sell side here. And as I mentioned moments ago, I said if they're going to keep it in a range like this, where it's aimless, they could take it down here to the sell side, accumulate longs, and they could be using this area up here as an offset. So in other words, like smart money could be buying the sell stops, waiting for price to go up to the buy side here, and they would offset that and that would be the morning move for them. Still haven't had that higher high on dollar index. $41.28, if it crosses that on ES, then we're going to look for 41.36.50, 41.36 evens. If it can touch that fair value gap just below it, right in here, the way you test this is if it trades to the top of the fair value gap or the middle point and rejects and goes higher, then that's probably indicating that we're going to see buy side taken out. And buy side is here. Another reason why we have these conditions like this is because the morning move prior to 8:30 and the drive in to that lower low, that was the real move of the morning. That was real easy. That was all back here. We broke through the old new week opening gap, created a fair value gap, and order block, trades up into it, sell off again, and down into sell side liquidity. All right, so we broke through our fair value gap there, and dollar looks like it may expand up into it. Looks like I doubt very seriously if it's going to retrace lower now on dollar. So let's see if we can get a drop off this fair value gap on ES. This feels like a whole lot of uncertainty back and forth. That's exactly what you're observing. Do you want to trade in this environment? That's what you take away from it. And verse, like looking at what we see here. Look at the range between 8:30, right here. I'm gonna move my mouse around. If you, for those of you that are able to know the answer to this, because I don't know, I was asked by someone, and this is also something I wanted to do as well. I don't know how to highlight my mouse cursor while I'm using OBS, and it may not offer that feature, but if it does, I would love for you to be able to send me a tweet, let me know. I'll see it that way. Don't send me emails because I have, you don't even know, that's 76,000 emails. I can't keep up with it. That's why I don't want to share my email address, because that's not a real efficient way of communicating with me. But look at the range between 8:30 and where we are now. Okay, real sloppy, real choppy. It's real indecisive. Exactly what we were calling for, and we still have not had that dollar index make a higher high. So that to me takes us back to that sell side taken, which we got here, whose retail mindset would be they sold on a breakout. Okay, trend followers. Okay, if it goes below that old low, I'll be a short seller as a retail trader. That's what their mindset usually typically is. Well, if they're caught short right now, and for them to be in the market short, the counterparty to that would be someone buying their sell stop. Okay, they're selling it to the market to get short. Smart money could be accumulating that as a long. Where would they want to take that ride to? Above the morning high here, and above these relative equal highs here. And what's resting above that? Buy side. So if they bought the sell stops, and there's willing participants that want to buy at a higher price than where we're at right now, what is that? That's the market efficiency paradigm, where smart money accumulates sells, shorts that come in the marketplace they're counterparty to. And when the market reprices to buy stops, they will sell to those buy stops. And that's offset distribution. So I would want to see a series of large range up close candles in here, if that is in case what is unfolding here. No trade and no regrets. That's the benefit of having done this exercise for months. You learn patience. You learn to appreciate the fact that you didn't rush in when the market really isn't that clean. Clean meaning The moves are easy to see. The telegraphing. It's obvious what the market really wants to do. You want to focus on trading in those environments, but you can't understand what those are until you sit in environments like this, where it's difficult to read. And don't listen to these 20-year-olds run around saying, oh, this is so easy. This is so easy. I'm doing this. Have them sit here and explain every individual candle if they think it's easy. It's not easy. I'm telling you from 30 years experience, this market right now is extremely difficult. And if you had an educator, whether you paid for them or you're giving your time to them, you would want them to be able to identify problem times in the marketplace where trading is going to be more difficult, more prone for you to fail. And if you can identify those times, wouldn't it be beneficial to you to know not to be participating in those times? And if you're too young to appreciate that, that's a testimony to your infancy as a trader, because that's one of the best skill sets to have, is know when not to do something. That's interesting. Dollar is not supporting that move at all in ES. So that means we're probably going to see a sharp move higher on dollar if we can break to lower lows on ES. ES might be leading it. So you can look at this and say, okay, well, the market keyed off of that 41.34 and a quarter level, which is an old New Week opening gap low. Failed to go to the buy side. We went to that teal colored old 5-minute fair value gap here and consequent encroachment. It's respected that. And we're down below here. We failed to touch the fair value gap here. If it would have touched that, I would have mentioned, okay, watch that to go down to make a lower low. Dollar index is still not moving to a higher high. Difficult read, folks. Nasdaq's broke its low of the day, but we have not seen a lower low that's formed already from the 830 low on ES. Well, I shouldn't say it like that. We've had this run here. But I would like to see it go through that. And that would be an agreement with the ES and NASDAQ making lower lows then, if it just to do that. But Dow has not supported that recent drop with NASDAQ. So we have a bit of an SMT divergence there. Meaning that if you look at the Dow, you can pull that up on TradingView with symbol YMH2023. And that low on the Dow is higher like it is here on ES, but NASDAQ, it went lower, and that's an SMT divergence. While dollar index has failed to make a higher high. Meaning we can run back for buy side at that 41.28. Very, very challenging. For some of you that ask the question a lot, when I share my observations on Twitter, they tend to be the right ones. I'm only commenting on the times when the market's really in my favor to do so. Versus if I was trying to call everything, because you're seeing it now when I'm in a live session and I'm telling you we're in a chop. Everything I'm taking and making an observation for you to watch and study. If I did that every time I did a tweet, it wouldn't feel like you feel, because you've only watched me do the high probability conditions with my experience. Because I don't delete anything on Twitter. And the things I tweet, and I had somebody say, well, it's because you have so many followers now, and when you say something, everybody's dogpiling on it and moving it. That's why I was facetiously saying, oh, you're dogpiling on it now. I'm not going to move the market because I said something. That's not going to happen. The market's going to move because it's going to move. And if that was the case, then why isn't the market moving when I set it live here, when I've identified it as a difficult market and we're in chop? Versus when I'm on tweets, I'm tweeting specific things. Watch this, it's going to go here. When it delivers like that, it's because I've only selected to talk about it publicly on Twitter when it favors my side of the trade. When I know I'm probably the highest degree of probability is on my favor, then and only then will I'll commit. That's experience. Here in tape reading, I'm trying to give you a minute by minute, one candle at a time view, and also reminding you that these are conditions that are this. It's chop. The moves are not clean. They're not very specific and precise where you can go in and say, here's a trade, here's a setup, here's a stop, and here's the multiplier for potential profit. So we have that lower low now on ES. We have it in Dow. Everything's moved lower, and now we should see dollar confirm that with a higher high. Hasn't done it yet. And you're probably asking yourself, well, why do you keep doing this? Why do you keep mentioning dollar? Because that is how you ferret out false breaks. Like we've made a lower low here. This still could be, luring traders in as a run lower just to send it back up to that buy side. Have we had follow through on the ES when it moved lower like that? Even though we've had NASDAQ, Dow, and ES now agree with lower lows. There's no S&T divergence between these two lows here. If you look at the relationship between NASDAQ, which is NQ, H2023 on TradingView, and the Dow, which is a YMH2023, and then ES, which is ESH2023. So that means even though we went lower here, S&T is not the be-all end-all. It's just it's like a qualifier. It confirms something. It confirmed that lower low, but we're still referring to the dollar index. The dollar index did not make a higher high. I want to see that, but because it hasn't done that, that makes this potentially a false breakout. And why I keep bringing up that buy side is because they could be now making a ripping run up into that 41.36 level. And if I were making the market, I would rip it up there in short fashion. I wouldn't give anybody opportunity to identify it and just roll right over top of anyone short. I would smash through this old fair value gap like it wasn't there. And I would run it right on up in through the old 5-minute fair value gap. Yeah, see dollars coming off its recent short-term high. It's not trying to make a higher high. That is not market symmetry. Market symmetry is where you have everything in agreement. You want to have everything moving in tandem with you. If it's a risk-off scenario, that means that foreign currencies and equities will be moving lower and dollar going higher. If dollar's going lower, that's risk on. You want to see Forex moving higher and equities moving higher while dollar makes lower lows. And that's the symmetry you're looking for. You're constantly measuring market breadth like that. That's the reason why I have all these monitors, because I'm looking at other assets as intramarket relationships and intermarket analysis, where I'm not relying on one individual asset to determine whether or not risk on or risk off is in play. Meaning risk off, dollars going higher, it's easy to find short sells for index futures and Forex and foreign currencies in those conditions. And you want to learn to think that way when you're trading. If you don't do that now, and you've had problems with understanding bias, understanding high probability conditions and framework, it's because you're not doing what I'm teaching you here. And you hear me referring to it every time I do a live stream because it's important. If it wasn't important, I wouldn't bring it up. But it answers a lot of the questions you see repeatedly asked of me. How do I know? How do I trust? When do I not trust something? When do I think it might be a fake run? It's based on balancing out the delivery of multiple instruments, not just one. Even though I'm especially fond of S&P, and I'm teaching you to trade one market and study one market, which is this one here, you're going to refer to other ones to support or negate the ideas that you're looking at in price. You want to see it really smash through that little teal fair value gap. You want to see it go through consequent encroachment, which is the 4128 level, rip right through it, and then preferably not even come back and touch the high end as a support. If it did that, that would be my indication and a signature saying that smart money wants that 4136. Now let me play devil's advocate for a moment. Let's assume that we had a bias that was bullish this morning. Everything being equal, saying that dollar, say, it was predisposed to go lower, and it was delivering lower prices. And we saw this run below the sell side liquidity pool that was identified here. We went through it. As it did that, I would have went long, and I would be adding if it went back down into this fair value gap. And then I would not add any more. I would wait for it to just rip through to 4136. But because we don't have that condition, we have to observe everything in small incremental pieces. Okay, so we're delivering through 4128. We want to see this candle come all the way through the top end of that fair value gap. That's preferential. Dollar's weakening here. That's going to provide like gas on a fire for this rally on ES. And where would it run to? Where we're in the fair value gap here, but it's not something that's all that concerning because we've been here before. This one here, this old fair value gap, is not all that terribly concerning either. It should cut through that like a knife through butter, a hot knife through butter, and go right for this area here where there's real orders. What kind of orders? Buy side. Why would it want to go there? Twofold. Number one, to kill the individuals that are short that use as a stop loss, and to utilize their stop loss as a means to offset distribute the longs that were accumulated down here with the sell side. And it can animate as far as up into here, and if it spreads its wings, we got that old 4140.25 level, which is consequent encroachment of the previous new week opening gap. And that's how we layer and make strategies around open float. Open float is buy side here, buy side here, buy side here. The apt pupil will notice that that 1010 level macro coincides with that sell side liquidity pool being engaged. Okay, now here's what I usually facetiously ask in my examples. If you were short, would you feel safe with your stop at 4136? Watch the volume imbalance in here. It's keying off of that right now, potential support. You think they're nervous now at 4136 stops on their shorts? The market's getting ready to take a walk right up there, Strata Chocolata. Dollar's really come off of its intraday high here. Looking at that Dow chart, it just reminds me how much I'm so thankful I never traded. It's so ugly of a market. It's just so spotty and just, I don't care for it. But at key points, it confirms or negates key turns in the marketplace. Like I use it for SMT, like I mentioned earlier. But you can still see turns in the marketplace when you're looking for SMT studies. Like you understand that I teach the index SMT divergence, which is typical Dow theory. Lower low in Dow should be lower low in ES and lower low in NASDAQ. That's understandable. That's understand that that's normal Dow theory. But when I look at like the dollar index, even though we may have lower lows, like we've met these lower lows here in ES, you see those also in NASDAQ, you see them also in the Dow. But you can still get these rips higher like this going the other direction. And the way you find them is by looking at them with the dollar index. And the dollar index did not make a higher high as you would expect to see that when they made their lower lows respectively. So that in itself is still SMT. So if you're trying to teach my stuff, make sure you teach it right. All right, so we have this candle here. Why am I picking out this candle here? It's the candle with the highest up close right here. And it's the up close candle prior to the drop lower below this low here. So I'm watching, my eye is right on here. I'm going to take this rectangle off. I'm going to take this one and put it right on here. Now I'm studying how price respects or totally disrespects this entire range here. It can go all the way down to the low of that. It's better that it doesn't. It would be better if it goes just to this fair value gap, because this is a potential bullish breaker. So you refine that with this range that shows a fair value gap. You'd want to see it accumulate a long position in here if it was going to go up to the buy side. Excuse me. It's Bella, in case you heard. Okay, that's probably not the best contrast, is it? Let me see if I can get something better. Yeah, it's a little bit better. So in this case, like if we're assuming that the buy side is going to be targeted and we've dropped back down here, I'm looking at what was done. Where's the damage done? The wicks. So your eye goes to what? Down here. What did they do down here? They ran sell side. Then they ripped it higher, took it above this short-term high here, went above, failed to make our run into this high and into this buy side. So that is lingering. That's a potential still there. Retail will see this drop off as, okay, it's going to keep going lower now. But I'm identifying this candle here as not just a simple resistance turn support because it broke through it. I'm looking at that entire candle's range, then extending it over to the right. And inside that range, I'm looking for any inefficiencies, fair value gap, volume imbalance, something to that effect. Because we have that entire range of that candle to be considered as a bullish breaker, we have to allow for all these wicks, the shadows below the candles. They can stab all the way down to the low of that. But the bulk of the candles are really telling you the story. And what is it showing you so far? It could fail here. Don't let me pump you up into thinking it's a buy. I'm just telling you, look at the candles, how the candles themselves, the bodies are staying inside that fair value gap. The wicks can go outside that all the way down to the low end of that that bullish breaker. But we would want to see the bodies stay inside this range and start to expand higher. I would still favor the upside because think about what we've seen so far since 8:30. This low has been taken here. This low has been taken here. We've only had one buy side run here. So this one didn't take out that high, and this one didn't take out that high. So in my mind, there's a lot more interest that's been not tapped into yet on the buy side. So if we're going to be chopping and range bound, it makes perfect sense to me to see it want to eventually gravitate to that 41.34 and a quarter and higher, or 41.36 and a half. Running out of time. I only have 1 minute and 30 seconds and I have to escape. I apologize, but it's one of those real world things, folks. So I'll say this in the last moments of our live stream here. I would still focus on that buy side as a primary area to monitor price today. If it fails to go to it today, before lunchtime, I would treat that as an afternoon objective, looking for a move between 1:30 and 4 o'clock. Apart from that, I would not be interested in anything right here because we've already probed the low end multiple times. I'd want to see, before I would want to go lower, I'd want to see it at least clean up that area at 41.35.50. That's my personal preference. And hopefully you guys got something out of this. I know it wasn't a whole lot of excitement, but there's rules to this thing and things I'm looking for. There's a logic that repeats. And over time with me, daily, weekly, and months, you'll see that there is certainly something there that's going to communicate differently than your classical retail logic. And I think that's going to be it. So if there's anything that takes place, obviously you'll have to permit me the benefit of hindsight because I will not be in front of the charts the rest of the day. So I'll try to do my best to give you somewhat of a review later in the afternoon. And I'll review what I did this morning as well on Twitter. Until I'll talk to you then, be safe.